In this session, we'll be working out another question on the preparation of reconciliation statement using cost accounts and financial accounts. Let's look at the question together. From the following figures, prepare the reconciliation statement to determine financial profit if the profit as per cost books is 88,460, and then they have given us some transactions. And what is expected from here is that we will have to prepare the reconciliation statement, and we have to estimate what is the profit as per financial books of accounts. Okay, so let's go about with the preparation of this particular question. So the students over here, I've got the format prepared, and as we are already familiar with the format, we will be starting off with profit as per cost accounts, and then we will have to estimate the profit as per financial accounts, and then from there we have to move on. So let us start off with this profit as per cost accounts. What is the amount? The amount would be 88,460. Okay, 88,460. And now let's go with the items one by one. Okay, let us go with the items one by one. The first is income tax. Okay, income tax. Income tax is what? This is a financial expense, and this financial expense, what do we do? Do we add or do we subtract? We have to subtract. So income tax amount, this is 10,000. Okay, income tax amount, this is 10,000. Okay, next, bank interest credited. Okay, bank interest credited, what is this? This is a financial income. So financial income, what do we do? Do we add or do we subtract? We have to add. Okay, so bank interest, this is 250. Okay, this is 250. Next, we have work overhead under recovered. Okay, work overhead under recovered, and this, what do? We have to subtract. Okay, this is under recovered, and 1,550. Okay, 1,550. Next, what we have is depreciation charged in financial accounts, depreciation charged in cost accounts. So there is a difference, and here what we will be doing is, please remember, depreciation amount as per cost accounts is way higher than depreciation as per financial accounts. So because of which we will have to, we will have to consider the over absorbed amount. So what we will do is depreciation over absorbed. Okay, so that is 400. So how did we get 400? So that was 6,000 minus 5,600. So that is how we got 400. Next one, admin overhead over recovered. Okay, admin overhead, which is over recovered. Admin overhead over recovered. And how much is this? And this works out to be 4,000. So this amount, admin overhead over recovered, is 850. Okay, this is 850. Next one is loss due to obsolescence. This is a financial expense. Okay, this is a financial expense. Loss due to obsolescence, this is 2,800. Okay, this is 2,800. Next, what we have is interest on investment. So interest on investment, what is that? That is a financial income. Okay, interest on investment, and what is the amount? The amount is 4,000. Okay, interest on investment, this is 4,000. And then last, we have loss due to depreciation. So what is that? That is again a financial expense. loss due to depreciation. This is 3,350. Okay, this is 3,350. Okay, now let's work out the subtotals. Let us work out the subtotal. $250 plus 400 plus 850 plus 4,000. This is 5,500. Okay, this is 5,500. So 250 plus 400 plus 850 plus 4,000. It is 5,500. So this works out to be 93,960. Okay, this works out to be 93,960. Now, let us calculate the subtotal over here. Okay, let us calculate the subtotal over here as well. Okay, let's work out the subtotal here as well. So, 10,000 plus 1,550 plus 2,800 plus 3,350. This works out to be 17,700. So this works out to be 17,700. This, if you subtract from this amount, it works out to be 76,260. This works out to be 76,260. Okay. So now, what is the significance of 76,260? This is profit as per financial account. Okay, profit as per financial account. This is 76,260. This is 76,260. So with that, we've completed the preparation of this reconciliation statement as well.